Hey there. Fed begins to pivot towards lowering rates. Let's go through Chairman Powell's speech.
Into restrictive territory, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening likely have not yet been felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. While we believe that our policy rate is likely at or near its peak for this tightening cycle, the economy has surprised forecasters in many ways since the pandemic. Ongoing progress percent inflation objective.
Since the pandemic, interest rates went up a lot higher and a lot faster than anyone had projected. So that is a vast understatement than what he said. I mean, prior to the pandemic, for our premium finance clients that we were working with, we were borrowing money at 2.7%. Today, they're borrowing money around 7.3%. The Fed fund rate today is about 5.3, 5.4%. So to say that's an understatement and surprise is no kidding.
These interest rates further, neither do they want to take the possibility off the table. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 4.6% at the end of 2024, 3.6% at the end of 2025, and 2.9% at the end of 2026.
Which is nearly right at 3%. So it's saying by the end of 4, there's going to be about a 75 to 100 basis point or 0.75 to 1% drop in the interest rate, the prevailing interest rate of the Fed funds rate. Going to continue to go down in 2025. And by 2026, from where it's at right now, 5.3 to call it 3, that's a 230 basis point drop, which is substantial when it comes to borrowing rates across all different categories, not just premium finance life insurance, but borrowing money for any type of financed purchase makes a huge difference.
The next question, which is when it will become appropriate to begin dialing back the amount of policy restraint that's in place. So that's really the next question.
Yeah.
And that's what people are thinking about and talking about. And I would just say this. We are seeing strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see. The other question, the question of when will it become appropriate to begin dialing back the amount of policy restraint in place.
So we're off to a good start. They're still trying to get inflation to the number that they wanted to get at, but where things are headed is good, and the markets have responded positively to this about the potential of an interest rate reduction. And then when those reductions do happen, the market should like it as well. But really want you guys to look forward. Go Google right now, ITR Economic 2030, and see what some of those projections are for the economy in 2030. And so the Fed is getting prepared for what is going to be an incident. It's bigger than what it was in 2008, 2009. And you have to get your financial vehicles and your financial plan in place as well. Talk soon.